Let's say you're an investor. Let's say you have some presumptions about financial markets and you want to make some money here, whether it would be great fortune or some decent savings for successful retirement. I don't know, but the thing is that you have some income, some savings, and you want to grow that via financial markets. Question is how you better tackle those financial markets. Well, here the answer is probably similar to what you could perceive already, that there are quite a bit of ways how to approach that, and there are quite a bit of people who are trying to succeed in markets, whether those are retail traders, retail investors, professional traders, professional investors, money managers, investment bankers, and everyone else that wants to be here. So most of the times you probably also will understand the fact that if you're thought of something, you are not the first one who is thought of something, and it's very difficult to be genius here. But here's the thing, in financial markets you don't have to be genius, and you certainly don't have to invent something new. And as big as cliche it might sound, but you simply have to do reasonable things on a consistent basis and watch your money to accumulate. That's the key in financial markets. Now it sounds obvious, but in practice it's not obvious, because statistically absolute majority of professionals are not able to beat the markets, and absolute majority of retail traders and investors actually lose money, not make money. But what are the approaches? Well, here are main approaches which I think have worked historically for professionals. First approach is that you actually don't try to trade or invest in conventional way. You are simply trying to find market inefficiencies and capitalize on them into your advantage. Actually, the most successful hedge fund and money manager of all times does precisely that. It's called Renaissance Capital, and its owner, James Simmons, is the most successful person in financial markets. He has better returns than Warren Buffett or anyone else who has traded. And he actually trades as a market maker and on statistical arbitrage. In simple words, what does it mean? Well, it means that he actually is connecting buyers and sellers and making money on those huge indifferences between prices. Or another way is that he knows that in one exchange or at one contract is slightly mispriced to another contract, and there are tiny differences how you could exploit that and make money on that. And thirdly, he has simply information and time edge. Now that doesn't mean he's insider trader, but he has that one split of the second advantage to you, that he could execute his trades much faster than you do. No, he doesn't trade himself. He has facilities of machines, computers, and legions of PhDs who are doing that, but you got an idea. So he doesn't think about terms what markets are doing half a year until now, or what will be price reaction to, I don't know, Fed interest rate hike or no foreign payrolls. He just simply have computers which has like millions of probabilities and what if scenarios if something might happen, and then he has countermeasure and scenario of all of these scenarios, and he simply knows how to make money on that by split second. So this is one approach. I don't think this approach is very useful for retail traders and investors, but it's effective approach if you are multi-billion hedge fund. Second approach is simply to make money on market anomalies and inefficiencies. Now, this is something similar to classical Warren Buffett, Benjamin Graham approach. Only difference is that they were able to do that in more conventional way in the 40s, 50s and 50s, because at that time you could simply go to database of stock prices and stock fundamentals and see which company is significantly undervalued by very simple means of price to earnings, price to book, or similar ratios. You could find those companies, buy them, and wait for markets to price them correctly. Now, this approach practically is not working now, and to do that now you simply have to wait for extreme tail events such as COVID crisis or some sort of special event which makes reasonably valued companies extremely cheap. And it's not able to do that on consistent basis. You probably have to wait for years for those opportunities to come, but they work because markets create anomalies, as we could see even in recent years, and you have to exploit them. Now, this is one of the angles which I use myself and advise to my investors, because it works, but it requires legwork, and it's not for everyone. If certainly you don't have time for do that. If you have time and resources, and if you are relatively resourceful, this is something that might work, and it doesn't require that much of the time. So, with that said, the best investor in this regard is Warren Buffett, who actually doesn't do it anymore because he's too big for that. But this approach still works. And third approach is something I would call global macro trading or trend following. In essence, this is the approach where you don't forecast markets, don't read news, but simply are waiting for markets to move in certain direction and capitalize simply on that move itself. You don't know where the markets are going and the extent of that movement, but you know that there is probability that markets will move. And your skill lays into your ability to minimize your losses when you don't have any moves and markets are flat, so you are losing money, and to maximize those moves when markets are going into either trends. Now, if you follow markets, you know that markets always move in one trend or another, depending, regardless of their time frame or markets, because unless the market is pegged or it has some price limits, they will produce trends. And this is the approach which are used by conventional so-called traders, whether these are hedge fund managers or successful traders. You will see that they all have this approach. Whether you could go simply to read book Market Wizards or look at global macro traders or so-called commodity trading advisories, and you will see that this approach is fundamental to their success. I actually teach this approach and do that myself, because this is the only thing that works if you are talking into terms of trading. And if you want to see about this content as well, you have to simply follow my threads where I explore these approaches to layman. So these are 3 approaches by professionals who have to devote some time and resources to this. If you really want to connect the markets, you have to do either of those approaches. But what happens if you don't have those resources in your place? The premise which I told you at the beginning of this video. Well, then you simply have to use the most conventional tool which you have, is to invest in financial products such as investment funds. Yes, it might sound as a cliche, it might sound too obvious, but that's the truth. If you know how to correctly make your financial plan, how to correctly allocate your money to investment funds and know wisely which funds to invest, you could actually make pretty decent returns historically. And this approach, it wouldn't require that much of the time and energy from your side, because you simply have to reevaluate them and rebalance them once in month or once in a quarter, or maybe even less, because here the thing is to allocate your capital for long term and wait for probabilities and interest to work in your favor. That's simple compounding interest into your advantage and probabilities into your advantage as well. Now, there are some red flags and nuances how to approach these markets, which index funds to follow, whether to invest only on stocks and other things. But the approach is simple. If you don't know what to do, use the most simplest, most straightforward way, which has proven itself into future. That's that. If you do simple as that, you will do much better than you initially thought you would be. And it's extremely difficult to know that. Especially if you're relatively new here, don't try to be the smartest guy in the room and make fortune in the first year by trading crypto. For God's sake, you will lose money, that's certainly. But what you should do is to use the principle that has been worked and produced more consistent results.